Good evening, everybody, and welcome to One Big Stock Market Sundays with me and the boys. Got with me Jordan, Will, and John. How are we, lads?
Yeah, man, I'm good. How are you?
Yeah, I'm good, man. I'm good. We've got a lot to touch on tonight, so obviously we've got a lot to go over. So first things first, what we're going to touch on. A few people were asking us about Spotify. So they were saying they wanted to listen to this stuff when they're at the gym and stuff. And great that our voices are so motivating. So there is a test episode on there at the moment, but it won't let me delete it until I put the next one up. So this one will be live in a few hours, ready for tomorrow. So yeah, what's your thoughts on Spotify and that, George? Do you use much podcasts and stuff on Spotify, or?
I need to get into podcasts more. I use Spotify all the time, but podcasts are like a secret thing, a secret sort of gem that I know I could use loads of, especially like going to and from work, and just haven't. So I need to get stuck into it, and probably won't listen back to our own podcast in my own voice, but other ones for sure.
What about you, Will?
I'm a bit of a YouTube maxi, really. So I don't have a Spotify Premium account anymore. I have YouTube Premium, so no ads. I can lock my phone. So personally, I won't be using it, but I mean, Spotify's massive, isn't it? So it's great for most people.
And yourself, John?
I used to use it quite a lot for podcasts, but I have just unsubscribed from Spotify whilst I'm saving for a house, save that extra little bit. But I do really like podcasts on Spotify.
So even though we won't be using it, listen to it, please do.
Yeah, definitely. And like I say, the link for the Spotify is in the description. So if everyone can go give it a click, go give it a follow, we appreciate it. So first things first, I am going to fire up the vote while Jordan touches on this and what this is. So Jordan, if you want to take over.
Cool, yeah. So what we wanted to start doing with these weekly streams and just across the whole sort of calendar year is just bringing a little bit of fun with predicting what the market's going to do. So this is us individually, myself, Jay, John, Will, and then also additional the stream as a whole. We'll each week make their prediction and what they think the stock market is going to do. Is it going to go up? Is it going to go down? And we're going to be using the S&P 500, the SPX ticker, as the benchmark for that. If a week is green, if a week is red. So we had that. We took that from the stream a couple of weeks ago, and then also last week we didn't have a stream, but we've taken predictions from that and put those in. We gave the stream, because we didn't have a stream, the majority choice from last week. So apologies on my part for being part of that choice and that it being wrong. So the stream is currently still on 0, but everyone else is currently on 1. But early days, I'm sure the stream can catch up. But yeah, a bit of fun to see who's sort of, as the year goes on, who's the most bullish, who's the most bearish. And also just sort of allow you to see, like, even with 5 different people guessing, actually how hard it is to predict and get it right more than half the time. It is a guess. So a bit of fun, something to have and track throughout the year, something we can look on at the end of the year. And just sort of go to show how easy or hard it is to get things right.
Yeah, so are you lads ready to give your predictions for the week ahead now, or do you want to do it at the end? Do you want to touch on it now? Because I'm happy to do mine now if you guys are.
I'm happy to do mine.
Okay, so I think next week the market will be green because I think we're going to open a lot lower. Me and Jordan was touching on this just before. So I think we're going to open lower this week. So I think at the end of the week we will finish green. So I'm going for green this week. Jordan, what are you going for?
Really hard. There's some big things. I don't think the Fed rate this week makes a difference. I think, exactly as you said, a very good chance of open lower at the start, and then is that sort of the worst of the week, and then it's only going to go up from there. Even though the week might be down from this week, it might open so low that it ends up green from Monday to Friday. And there's obviously some big earnings that we'll touch on later as well to come through, and maybe that will give the market a bit of a boost. So I am going to, similar to you, put my first bullish prediction in and go green.
Yeah, so the logic you guys are talking about is exactly what I did for the week just gone. Like, I thought we'd start low and then we kind of get over it. So I'm going to back bullish again 3 in a row and go green as well for this week.
I'm going to make it a full house and go for green as well.
So at the moment, I have started a poll, and the poll is 56% red, 44% green. But obviously, we will see at the end of the stream how the stream votes. On the back of what Jordan said, so obviously we are going to do this as a little bit of a competition, bit of fun throughout the year. If the stream beats me, Will, John, and George, because we will obviously, it's a little bit of a Premier League. If you guys beat us, we will have to come up with an idea of some type of prize to give back to the stream. I'm not sure what. I'm not sure whether we do a cash giveaway. I'm not sure if we do an item giveaway, or I'm not sure what. So you'll have to give us some ideas. Maybe someone can go spend the week at Will's Manor. I'm not sure. But yeah, we'll have to sort something out. So definitely up for that. So yeah, we'll get the streams voting at the end of the stream because it makes more sense. So next is the OBJ fund. So Will, do you want to take over, my mate?
Yeah, so Jay brought the idea to us of having this train 2 and 2 pi, because obviously the pi function on train 2 and 2 is a massive part of the platform. I know there's like different controversies, and certain ones are really popular and certain ones aren't. But I think now with the introduction of, I think a Vanguard makes a few, Wisdom Tree makes a few, like the pies are a real feature. And when we were sort of discussing sort of what direction do we take the pi, I think there's sort of two kind of clear ways we could take it. We could structure it as a really sensible long-term portfolio with really careful adjustments, and really I think being really precise and giving like a large weighting to the low beta large caps, for example, something like the JP Morgan. But I was more in favor of taking it into a bit more of like being like a lot more fun. So we went with a 10% allocation for each. So if you were making this portfolio and it was your portfolio, the three small caps, like which ones are they? OSS,
I
for
believe it was
example.
Redwire, American Bitcoin, maybe. I can't remember what it was. I'll have
And
to pull up
OSS. Yeah. So if we were making this portfolio with, say, like a 10, 20-year time horizon, those would be like our moonshots. So they would probably be 5 to 8% of the portfolio. But I think to make it more fun, to make it a reflection of One Big Journey server as a whole, and to make it so it's just easier, so everything's 10%, we've gone with 10% per each. So it will be high beta. It will have a higher beta than the S&P 500. But hopefully we've got some of our favorite stocks in there from the server. So I think this can perform pretty well. And none of us have put a great deal of money in this. Obviously, this is not financial advice. This is not a pie. We have a financial, we don't believe in this financially per se. It's fun. We do want to try and beat the market, but we'll just see if we can. So we'll just go from there. So hopefully some of you guys have copied it. I can't quite see that, mate. How many?
Sorry, I'm zoomed out. So at the moment we've got 88 people that have copied it.
Cool. So yeah, so it's very much just a bit of fun, and hopefully you guys can understand why we haven't gone for a perfect asset allocation and gone for more of a risky 10% across the board kind of approach.
Yeah, so just to touch on the back of what Will says, like I say, we've done this in two ways as well. So I'll be putting in this every Friday to track how it would move if I invested in it every week. And I've also got it on my invest account where I bought at a starting rate. So I'll get a true value of exactly where this finishes at the end of the year. So I hate how this works. So at the moment, it's currently down 2.93% on the actual weighted white. So yeah, that's something that we're doing inside OBJ. A lot of the stuff gets voted. So obviously it depends on how the server goes for stuff and stuff like that. So moving on to the next thing. We have got, so I can zoom into this, so I know it's a bit zoomed out. A lot going on this week, haven't we? So obviously we've got another government shutdown that's on its way, possibly. It's looming. Potential new 100% tariffs on Canada. President Trump actively looking to acquire Greenland. I'm not even going to try and say that towards Iran. Will's going to take the fun out of me. DOJ investigation into the Fed chair poll. We've got BlackRock's CIO as the next Fed chair, and the stimulus checks. What we on? Will, you're probably good to touch on this from the start and go. So what's your view on this, mate?
Yeah, I think it's going to be a choppy week for sure. If you just want to bring up the Kalshi or the poly market percentages, so as it stands, guys, it does unfortunately look like there's going to be another government shutdown. I know that the first 2, 3, 4 weeks of the last one, wasn't really much of an issue. But when we hit the 10th of October with the great crypto liquidation, I think all the government shutdown, a lack of liquidity kind of really hit the whole market. I just don't think the market, well, obviously the market doesn't want this, but I think the market really, really doesn't want this shutdown. This is not going to go down well. It's not going to go down well in a year of the midterms. I don't think neither party truly wants this, although it must be said that it's generally like the Democrats who are pushing for this. I think a lot of it is for very political reasons, with the 2 deaths of the bystanders during the ICE raids and riots. So a lot of the disagreement is over the Department of Homeland Security, which ICE is the biggest department within that. And basically, Trump wants to increase funding for the DHS, and the Democrats want to cut funding. And I think, to be fair, they've got the political capital now with 2 deaths from ICE officers. So it's going to be interesting. And of course, now this is back on the table. There's the other problems as well over funding for the military, the funding for the ACA subsidies. So once political capital builds up on one particular issue, I think those other issues also come to the forefront. But it's particularly the deaths in Minnesota via ICE, which have seen the statistics of a shutdown drastically shoot up.
Jordan, what's your touch on a government shutdown, etc.? How do you viewing this at the moment?
Yeah, it is looking really likely that it will go ahead, and if it does, then cash will just come into play for me, and I'll be looking at what dips are the most cost effective, and focusing on that side of things, and as I've always said, making that sort of downside and downturn turn into a positive in some way or another. There's lots going on, and the same Twitter account made a similar tweet earlier this week, which was really good about just how early in the year we are and how many big things have happened, and it just being the most tradable market there's been for a long time, if not in history. There's so much going on, so much volatility, so much movement, and then just capitalizing on that, I think is the only real way to respond to that.
Yourself, John, what are you looking at this at the moment? How are you positioning with what's going on with the government shutdown, etc.? And let's stuff.
Well, obviously, we discussed this in our previous live streams before Christmas, and we mentioned how it might be likely. We did not. Obviously, that was for a different reason. That was to do with the healthcare. This is a completely different reason. And as Will said, I don't think the markets want this, and I think this one could be worse than the previous one. Immediately, I don't feel like the markets reacted for the first few weeks of the last one. It was towards the end where it started really taking a dive from it. So I think it's very interesting. I would like to have had cash on the side, but like I said, I haven't deposited any money into my account this month for other things in my personal life that I have to spend the money on. But it would be a perfect time to just sit on your cash and any opportunities that arise to take advantage of it, especially if one of your stocks goes under your average. That's really an easy excuse to average down.
Yeah, no, I agree. And I think at the beginning of January, obviously, I started taking some profit in some stocks because I thought, obviously, the shutdown, which we spoke about before Christmas, because of other reasons, I was quite laughed at that decision, but from a few people, but it's tuning out to be quite a wise thing to have done in the end game. On regards to the second thing, so obviously we'll touch back on what's happening next week in a second. If people haven't seen this, I'm not going to try and pronounce the X name. Will, how do you pronounce this?
I haven't got a clue, mate. I haven't got a clue.
I'm going to say Kobayashi then. Kobayashi letter, which sounds
Cool.
about right.
Yeah.
It's an exact, well, it says it's an exact tariff playbook, a step-by-step guide. And no, everyone might say, oh, you can't do a step-by-step guide. If you followed this for the last few tariff things that have happened and did stuff like that, you would actually see it does play marker by marker. I'm not going to go over each one now because it's a very long read. But I think everybody should read this at some point. It's got 10 steps in there, 13 steps, and it's a constant repeated cycle. I have put it in the chat, so if you want to go check it out, you can do. I think it's important to have a read through this because it really puts you in a position when you start reading it and having a look what's happening. You go, oh, that's it's very interesting how that plays out, to be honest. So, week ahead, George, we've got the tariff threat. We've got obviously the markets react to this tonight when the overnight markets open, when the futures open at 11, etc. 75% chance of a government shutdown. Obviously, that's fluctuating. January consumer confidence, Fed interest rate decisions and press conference. Obviously, big earnings this week. Where you at with next week, George? Where's your head at with what you're looking at for the week ahead?
Yeah, as I alluded to in sort of when we just predicted what we think the week will do, there's so many big things this week that makes that guess, which is ultimately what it is, really, really hard. I said already, like those big earnings on Wednesday, they can themselves, depending on what those earnings are, shift and pull the market in certain sectors of the market in certain directions. People use those as market indicators and sector indicators when those reports and earnings come out. Then, of course, there's lots of things that we're waiting for big decisions on and big announcements on. I think, again, as I said, the Wednesday Fed interest rate decision, I think most people aren't expecting there to be any rate cut. So I don't think a confirmation no rate cut will do much. It will be more about what comes out in terms of future looking for the rest of this year, if they say anything else about more than one cut for the rest of the year, and just sort of what they give as their outlines and their expectations onwards. That will be the more significant takeaway from that press conference and what affects things more, I think. But there's just so much. So just for me, as everyone else has already said as well, I think just expect more volatility, more movement. And as I said, I think that the focus and the mindset you've got to have for that sort of thing is that ultimately that movement is what we need to be able to grow portfolios. If things didn't move, then there'd be no point. So turn the movement into something good, manage it well, and you end up well in the long run.
Yeah. So, Will, what's your thought on this week ahead, mate? How you positioning yourself for it?
A lot of volatility, I think, but I think the main thing I'm looking at really, aside from like the geopolitical stuff, is Wednesday with the interest rate and the Mag 7 earnings. But obviously, we'll cover that later on. So yeah, like I think it's going to be a similar week to the one we just had. To be fair, lots of news, lots of geopolitical news, earnings coming in, and I wouldn't be surprised if we have an up 1.5% day on the S&P, or if we have a down 1.5% day on the S&P. Like it's just one of those weeks.
Yeah, no, I agree. Like I say, I think the next week, Ed, like if there's a lot of outside noise as well, it can shadow a lot of the earnings. Like you said, that we'll touch on in a bit. It is important those earnings start coming in strong as well. Like you say, the interest rate, the notes of what's coming out on Wednesday is a big listen to. To just go back, John, and just speak on this because I did miss it, so it is my bad. The week that's just gone, obviously we've got Davos, we've got the tacos and everything that's just happened. What's your thoughts on what happened last week, John? Like where were you at with how you positioned yourself last week with everything that went on?
I just sort of stuck to my plan. I think last week was quite a turbulent week, and I didn't really have a lot of time to look into it because of how busy I was. But it is literally just, honestly, what's going on, I don't even know. Personally, I think Trump's trying to position it so other countries step in so he doesn't have to do anything. If it gets to the point where he forces a deal and actually gets Greenland, I'll be quite surprised. I think he's just trying to play a bit of chess here and move countries around to benefit the US more than anything. But I honestly, if the Greenland deal does go through, how can anyone even predict which way the market's going to go?
No, and I agree. And I think what some people got towards the end of last week, they started throwing their hands in the air like we'd sort of everything was solved and we're out of it, which I think what we've learned from the China deals and everything else in the past, that until something's in writing and actually done, it's not done. And Will, what's your take on this, mate?
Yeah, I think it's a really complicated one. It's a difficult one. I think what's happened is that people have realised that Trump always chickens out, and like the gentleman in the Financial Times who kind of thought of the acronym has done really well from that, I think, because it's proven to be completely true. But the thing is that it's become a really vicious cycle. So increasingly, the markets have realized that Trump always chickens out. So therefore, the reaction to these major pieces of news, these major statements, these major threats have become less and less and less. And I think that bothers him. I don't know whether he wants people he knows to buy the dip and that's why he's doing it. I don't know whether he wants to be perceived as like a strong man who can move the markets and really kind of harness that power. But I think it's bothered him that the market hasn't been reacting. So therefore, he's been increasing the level of absurdity, the craziness, because he wants those major market movements for whatever reason. So I think that's why he's gone so hard on Greenland, because he wanted, well, like obviously I'm sure he does want the US to benefit from Greenland in some way. I'm not denying that. But I think clearly in the last couple of weeks, with the amount of tweets and pictures and comments, he's ratcheting it up because he wants to see a big market movement. So this week was very volatile and there was some large market movements. But I think if this had been 12 months ago, it would have caused a much, much bigger market reaction. But I think global leaders, markets, retail investors have got a lot more used to this kind of thing. And also, it's becoming a lot more quicker as well. So obviously in April last year, with the Trump tariffs after Liberation Day, that was like a month of choppiness. But in the end, April actually finished green. Whereas this time, it's only really been a week of choppiness. And now, even though, as you say, Jay, it's not actually signed and sealed, but Trump's announced that essentially the US has mineral rights in Greenland now. And they've secured, a bit like the British have two sovereign army military bases on the island of Cyprus. So those bases are actually technically British soil, even though they are military bases. I think Trump has said that he secured basically a similar deal to this, where they can build X number of military bases, and when they build them, they actually become like US soil effectively. So it looks like the US are going to increase their military presence there. NATO may increase their military presence there in general. He secured mineral rights, and I think it's a bit of like a slippery slope. So now he secured this, maybe in a year, maybe in 10 years with a different president, maybe in 20. But as the Arctic melts, as the Northwest Passage opens, as the Arctic sea trade routes open further and further, it may be that the US slowly tries to grab more and more of Greenland. But yeah, I think this just extends the ill will and the sour feeling from NATO after his comments about Afghanistan as well, the troops. And since 9-10 months ago, since April last year, a lot of European investors, a lot of European institutions, Australian pension funds, Dutch pension funds, like the sentiment in the EU in particular, and also the UK, Australia, and New Zealand, isn't good towards the US. It's really not. And these little things like this can affect more than just the stock market. They can affect the dollar index. They can affect the run to gold, the run to silver. So I think Trump needs to be careful not to alienate too much of NATO. And I hope that he doesn't increasingly do more brazen things just to tackle because he wants a market movement.
No, I think that's a fair take. And I think, like someone just in the chat, which I'll read down in a sec. So yeah, I think, like I say, the minerals on the back of it, and like I say, the land, and I think where you say they'll push more into it in the future as they go away, as long I'd believe in that too. But until, in my own perspective, not see something in writing, but have where the deal's done and sealed, it's always something that can be reverted so fast, or something goes left because he's demanding more, or something like that happens. I'm not going to ask for your take on that, Jordan, because I feel like Will just covered everything for us. So, but touching back on this one here real quick, So obviously going into the next week of what we're looking at, if we see a market close, a government shutdown, it's going to be the 31st. So we're looking 6 days. So it would be on the back end of next week again, wouldn't it? Well, this week. Is this something that we end up going into a weekend and then it happens, like, and then we're back into a rocky state for the week after? Like, where are you at with that, George? Like, what's your views on it?
I'm really not sure. I mean, we have seen a lot of stuff, I think, very intently timed around weekends, and maybe that comes into play. Although with the government shutdown, obviously, it's nowhere near as in control as putting out this very sort of stark and alarming tweet is. You can pick the exact timing of that. I think all the timing of those are picked purposely for when they come out. But probably for me, I'm more on the fence for government shutdown and where that will land, how that will land. I don't think it would be. Part of me feels like it won't be as long as the last one. I feel like the last one felt more unexpected, and it felt like it was the first one such a long time and so many different barriers to that just extended it and extended it and extended it. I don't think that either side. I think similar to what Will mentioned earlier, I don't think either side do want it, and if it does come into play, I don't think either side will want to prolong it realistically. So I think it would be shorter.
And obviously over the weekend, obviously something I track a lot of all the time. Bitcoin's massively, well, we might say massive, but 3% down today. Will, do you track Bitcoin much? Do you watch it a lot?
Yeah, I do actually, and I'm actually going to cover Bitcoin.
You're going to touch on this,
and with like the gold and everything later on. To be fair,
yeah, no, that's fair enough. And then last thing for me to share here, and then obviously we'll go over to that because I know you're going to start touching on that. This is a great graph which I always like to use, which is by Charlie, and obviously he does these quite near enough every week and stuff like that, which I always like to look at. And it's quite interesting when you start looking at stuff like year to date where everything's at already. Like I say, I know gold you're going to touch on in a minute, Will. Small caps are actually up by 6.7%. This is year to date as well, so this is this year. Bitcoin was up by 0.9% when this was out. I don't think it is now. So obviously that's massively down. You've got your stuff on metals that you want to touch on there. Will, is there anything else?
Yeah, although just before we do that, mate, I think it's important just to highlight the very top thing on the next week. So I think the government shutdown is more for like, so it definitely will be reacted to tonight when the futures open, but I think that's more like Thursday, Friday onwards for next week. But Monday is going to be the 100% kind of tariff threat. So I think it's very similar to last week where all the Greenland stuff over the weekend, futures, Greenland. Whereas tonight, this weekend it's been Canada tariffs and Trump completely U-turning on that. So Trump's saying that he's going to put 100% tariff on Canada because they've signed a major deal with China. And it's looking like they're sort of moving closer with China, also following Mark Carney's speech at Davos this week as well. So I think originally Trump said that he was completely fine with them having a deal. Then Mark Carney had his speech, which effectively was saying we should push back on the US and like the global order of the US and create a new global order. I think because of those comments, Trump just snapped and said, right, here's the 100% tariff. So I think imminently that's like the bigger threat to the market tonight.
And can you touch on, well, if you're happy to touch on it, why it's so important if there's 100% Canada tariff? Like, why does it matter that if there's a tariff on Canada, if they're retaliating? Like, obviously they have a lot of their cars from there, etc., don't they? Is there anything else you want to touch on that? Or
yeah, so I think it's like a double whammy. It's like the market in terms of trading, because they have the longest border in the world. So there's a lot of trading between Canada and the US. With cars, he said energy as well, but they are major trading partners. But also, I think it's geopolitically with NATO and threatening an ally and pressuring Canada. Because remember, the reason why Mark Carney actually got elected was because of Trump's jokes about the 51st state, which pushed the Conservative candidate out of favor in Canada, and Mark Carney got elected last year. So it's in terms of the markets and trade and tariffs are inflationary. So I think it's also like a reflection of breakdown in the relationship as well.
Yeah, no, totally agree. Sorry, I was just reading that message you're putting in that private chat. Yeah, so that's totally right. Caught me off guard then, finishing right then, Will. Yeah, is there anything else you want to touch on that before you take over and start touching base on the things you wanted to touch on?
No, I'm good. George,
yeah. John?
I think I want to, for me, everything else is going on, that's key, but I'm also looking at point number 3, which is the January consumer confidence data, because I still don't have confidence that the macro environment in the background is massively improving. And if you look at some of the earnings next week, it's not just the big tech stocks. You've got some stocks that'll really highlight the spending around the economy. So you've got Starbucks out there, but there's UPS, there's Altria, which is a massive brand for consumer goods. There's Deca Brands, and there's a lot of flight airline companies, especially American Airlines. So that will also highlight some of the underpinning spend of the US population, really, in my eyes. So I'm also keeping an eye on that because I think that's just as important.
Yeah, no, and is there anything that you're specifically watching for that's going to give you a vote of confidence in one way or not the other way?
It's just what they say about the macro environment. I know a lot of companies will blame it if they have a poor performance anyway, because that's an easy cop-out. But if there really is a major downtrend across quite a lot of companies that are heavy consumer-facing, then that might start raising questions around consumer spending. No,
that's fair enough. I think that's a great thing. Like I say, and I think a lot of people who invest don't actually watch a lot of retail, should I say, don't watch a lot of the macros as much as some other people do. Do you watch a lot of the macros, George? Same with you, Will. Obviously, we've got down the list. Do you watch the macros every time they come out? Are you looking at the market events as they happen, or do you not pay that much of attention to everything?
Yeah, definitely. I think, to be fair, a lot of the data that come out, it's not often that the data is that far from what was expected in the same way that company stock earnings can be. If there are numbers that are different from what was expected, you have a very small percentile. So watching over the macro data, then the wider macros that come out for sure, and then the rhetorics that come out as well. So similar to what John said and what I said earlier, for instance, the Fed press conference, less about their actual decisions on the interest rates and more about the rhetorics and what they frame and what they're talking, explain about that. I think has always been more important for me in a similar way to earnings calls. It's really nice to hear the numbers of stocks that you're invested in and hear their revenues go up and their free cash flows go up and the margins go up, etc. But equally, for me, it's just as important, if not more important, to hear what they're forecasting for the near future and what they're saying are some tailwinds that are coming up or some headwinds that are coming up, and working through those, because investing for the most part is forward looking in terms of what we're buying into and the valuations. So the forecast is often more important than the current state of affairs.
And yourself, Will?
Yeah, I do pay attention, but I think the big 3 I would mostly pay attention to, which is GDP growth, non-farm payroll, and the PCE inflation data, because those are 3 which really matter. I think, especially with the US, there's a hell of a lot of macro data comes out every week. There's a hell of a lot. So you don't want to get too lost in that, in my opinion, because a lot of that doesn't necessarily matter, or it certainly maybe it can add to a long-term trend, but it's not something you want to be looking to track every single week and sort of really get bogged down in. If you've got, say, 5 hours a week to do this in general, cover this topic, I would spend most of that I'd spend most of that researching stocks, because I know a lot of famous investors don't like to get too bogged down into the macro data. It is important, and certainly for certain stocks it can be more important than others, but I think ultimately that the fundamentals of a company matter more than random macro data, to be honest. That's my opinion anyway.
Yeah, no, I think like you say, everyone has their own. I think you've hit it there though with the best 3, top 3 that you should be following the most for sure. Like, I think it's important to watch the macros at the very least, because it does affect the market. It like Jordan says, does matter about how they're forecasting and a sentiment around stuff, because it's not just about how companies report earnings, etc. The macros matter as well. Right, I believe we've touched. Are you happy that we've touched on everything there, Will? Is there anything else you want to touch on, mate? Or? No, that's cool.
Yeah,
right,
good, mate. Yeah,
Will, I am going to share your screen there, mate, and you can take over. So let me just remove mine out. Where's my screen? Too many screens on the bottom of here. There you go, mate. You're good to go.
Cool. Can everyone see my screen? Yeah.
Yeah, we're good.
Cool. So this week, I really wanted to touch on the US dollar index, which is the Dixie, because I think it really moved a lot last week. And it was really interesting to me because this is a time of global uncertainty, Greenland, tariffs, and traditionally, the dollar has been a safe haven. And as we saw last April after Liberation Day, well, we can see here. So during April, the Dixie crashed, like the Dixie's come down. And since then, it's basically broadly been a trend downwards. So I really wanted to touch on the Dixie, but also gold and silver, precious metals, because they've been flying recently, especially this calendar year. And then finally, at the end, I'm also going to cover why gold and silver and not Bitcoin as well. So,
sorry, Will, just to put in, just in case anybody doesn't know, what is the Dixie? In case somebody doesn't know exactly what that is.
As I said, so the Dixie is the US dollar index. So it's DXY, but we say the Dixie rather than saying DXY.
Yeah.
So,
okay. No,
all right. So, all right. No. So, I see what you mean. So the Dixie is, it's the US dollar compared with a basket of currencies. So there's the euro, the pound, the yen, the Swiss franc. So it kind of combines all of these currencies against the dollar to give like a generalized kind of FX US dollar strength type index, if that makes sense. So that's basically what we're looking at, is how it compares to other major global currencies.
And if it's down, that means the dollar's weaker, and if it's up, it means the dollar's stronger. Is that correct?
Exactly. Yeah.
Just in case, we've got to remember there's some people that might watch us that don't know what that is. Full stop.
Yeah, for sure. So on this, I've got all the Dixie years going back to, I think, about 2005. So I know that the graph's a bit messy, but the second bottom one is 2025, so minus 10%. And then just to show like the breakdown of the US being a safe haven, 2022 was a turbulent year, plus 7.6. So that shows the dollar being a safe haven. 2008, obviously we all know how turbulent 2008 was with the great financial crash, plus 7%. So it just gives you an idea that since 2005, 2025 has been the second worst year for the Dixie in the last 20 years. So just to give an idea of like the current landscape. So just for context, what I'm going to talk about. Gold, over the last year, plus 81%. So these are absolutely gigantic moves for precious metals. Year to date, 15.28. So if we look at like the 10-year chart, we can just see how it's been broadly flat, trending upwards. And then since sort of early 2024, that's when it's really began to run. And then in the last few weeks and months, it's almost going vertical. Silver's very similar. In the last year, plus 224% on precious metals. So you can see over the last 10 years, it's plus 285, but just in the last year, it's 224. So it's gone parabolic in the last 6, 9, 12 months, like a real run on precious metals. And then just finally, for some context, so over the last year, Bitcoin is down almost 18%. And obviously earlier we're talking about Canada and the government shutdown. So even just today, Bitcoin is down over 3%. Some people see this as a store of value. Some people don't. It is very volatile. And obviously, if you look over 5, 10, 20 years, it's done exceptionally well. But it has had a particularly terrible year, especially compared with precious metals. So firstly, I want to look into why the dollar has been losing value. And I think a lot of that has been to the aggressive use of tariffs, the trade war friction, and a lot of supply chains were affected with China and other parts of Asia. And I think generally this took the market to be in a risk-off mindset. I know that retail bought a lot of the dip last April, but in terms of like the global institutions, they saw this as a major catalyst for global change, and this took them onto a risk-off mindset. Obviously, Elon Musk was working in the US government. He headed the department Doge. So Doge was all about cutting spending and cutting waste in the government. I think most people saw as a good thing. Maybe not the way he did it, but overall they saw this as a good way to run it. But later on that year, with Musk leaving Doge and the passing of the One Big Beautiful Bill, this really signaled to the market, the globe, that the US wasn't really that concerned with its gigantic debt. So the current deficit, the current level of debt to GDP is 124%. So this is like a live clock of the current US national debt. So it's $38.6 trillion. So it's 24% more than the annual GDP of the US. So it's really massive, and this has become a really large concern over the dollar. How will they pay this back? And later on, I'll discuss, whether there's concerns over even if they can pay it back at all. There's also been a lot of dislike of the dollar because of Trump's treatment of Chair Powell. See, I just put in Trump and Powell FT, and there's loads of stories all to do with Trump's attack on Jerome Powell, the criminal case around him, into the building around the Federal Reserve. So when a democratic country, especially the one with the US, which has the globe's global currency reserve in the dollar, when it seemed to be meddling, the executive is seen to be meddling in the Fed, in the the national bank, it doesn't add stability. It weakens stability. It makes people more worried. It makes people scared. It takes away credibility from the dollar, from it being ran correctly, and from the US essentially looking after their currency correctly. And this generally just spooks markets for sure. Additionally, so I think China and India and Saudi and Brazil, due to the tariffs, due to changing political sentiment, they've been selling off their US treasuries. Because if you didn't know, there's trillions of dollars of US treasury bills, US debt, owned by the UK, EU, China, Australia, India, and certain countries who are agnostic, let's say, towards the US, not their biggest fans, especially since Trump took over. They've been selling off their US debt, which puts downwards pressure on the dollar, which weakens the dollar. So yeah, we can see here, so the China Treasury holdings have fallen below those of the UK. So you can see how high they were. China is in pink. The UK is the bright blue. So China was once the largest holder of US debt, and it's gradually become sort of a lot more aligned with the pack as opposed to being the leader. Even smaller things like the ABP is a Dutch pension fund. They've been selling off their US treasuries as well. In Sweden, their largest pension fund has been selling off treasuries. So you can see that there's a large downwards pressure on the US dollar. And because of all these problems, if we look at the 10-year US Treasury yield, so during this time here, they were hiking rates. So Jerome Powell was hiking rates because of the really high inflation following COVID and around 2022. So as rates stabilized, it is broadly in line with where the yield should be. But we've since began cutting. There's been a few cuts since, and yields have stayed where they were, even though the Fed base rate is about 1%, 1.5% lower than it was at its peak. If there was confidence in the Fed, and if the dollar was seen as that safe haven, the demand for US Treasuries, the demand for US bonds would bring down this number a lot lower, maybe around 3.5, 3%. And this is one of the most important charts in the global financial system, the US 10-year and the US 30-year. This is how much it costs for the US to borrow money. And therefore, it has a knock-on effect with lots of other things, with US population borrowing money to buy things as well. But ultimately, in terms of for us, it affects how much it costs the US to pay back its debt. I just want to quickly look at why Trump wanted to devalue the dollar, because I think we've heard that a lot last year, especially. Why did Trump want to devalue the dollar, and maybe has it gone too far? So the dollar makes exports a lot cheaper, so people can buy things priced in dollars for a lot cheaper. And I'm sure you've heard one of Trump's main policies is about bringing manufacturing back to the US. He wants factories, he wants AI data centers, he wants production of chips, cars. He wants it back in the US. And in order to aid that, he wants a weaker dollar. So when they export things, it's cheaper for other people to buy, because otherwise it's going to be far too expensive. And when we go back to this as well, a lot of these tariffs were based around the trade deficit. And because the US is such a rich country, they actually import a lot of things because there's such a high demand. There's a strong consumerism culture. But Trump wants to equalize the trade deficit a bit more, and he wants to export a lot more than they've been doing so far. So I think it's important to look at as well, has the dollar began to lose its place as the safe haven? So as I said earlier, last April, the dollar also sold off, which is not a good sign. Currently, this month, the dollar's also been selling off again, which isn't a good sign for the dollar. Traditionally, when there was turbulence in the market, the dollar was bought, the dollar rose. People went to buy US dollar, they went to buy US Treasury bills. But because of the gigantic debt, because of the one big beautiful bill, it's led to things like Moody's downgrading the US from AA1 to AA1 from AAA. So it now sees treasuries as not risk-free assets, but assets with structural fiscal risks. As I mentioned as well, the dollar is also losing its place as a safe haven because of the pressure on the Federal Reserve. This is not seen as a good thing for the dollar. But also, one thing I haven't spoken about so far is the weaponization of the dollar. With the aggressive use of tariffs, but also sanctions as well, it's meant that a lot of countries want to try and move away from the dollar, move away from the petrodollar, because one of the reasons why dollars are so important is because oil and gas, energy traditionally has been bought and sold always in dollars, even if the US isn't involved. If Saudi are selling to China, if Iran are selling to Japan, it's still using dollars. But increasingly, they're trying to move away from this. So with things like BRICS Pay and Enbridge, particularly I like the BRICS nations, so Brazil, India, China, and the other countries. I think now that there is more countries in BRICS, like the UAE, Egypt, they're trying to create a way of buying and selling without needing the dollar, without needing to boost demand for the dollar. And they're using these two things, BricsPay and mBridge, to create a way of not using it. And these are actually both on the blockchain as well. So China's cross-border payment system has also seen a massive increase. I think from last year was the first time that Saudi and China managed to transfer payments of energy without using the dollar. So they're seeing it as an alternative to SWIFT, and SWIFT was the traditional monetary platform which always involved the dollar. So yeah, and this was just a chart showing that China is increasingly buying energy from Saudi Arabia, and even though Saudi Arabia is a big ally of the US, it's very, very happy to not always use the dollar and help China out and use one of their preferred ways of paying. There is one other aspect which pulls the dollar up rather than down, and that's the rise of stable coins. And the dollar peg stable coins are pegged 1-to-1 with the dollar. The largest buyers of these are non-sovereign buyers, so non-countries like Circle and Tether. And this has particularly increased since the Genius Act of last year, which was a big bill for crypto. And this is a good thing for the dollar because it kind of gets the dollar into like the nooks and crannies, if you like, of the global monetary system, because it's on the blockchain, it's crypto, and these dollar stable coins are increasing in popularity, but at the moment they're still pretty small in number in terms of value as well. And even these have actually seen gold pegged stable coins become more and more popular. So precious metals and commodity stable coins are actually increasing as well. So to give all that context of the weakening dollar, now let's kind of come to the core of why I wanted to talk about this, which was gold and ultimately silver as well. So from more like the West's point of view, so the US, UK, EU, a major legislation change with banks was passed. So the Basel III Endgame. So it allowed the UK, US, and the EU. So it changed the gold as a tier 1 asset. So now it allowed banks to count gold as 100% of its market value, actually within the bank. So that the TLDR is that basically Western banks, big banks, are buying more gold. But most of the demand for gold has come from like the East, China, India. As I said, they've seen the change with crypto and with payments and with stable coins, and they want to capitalize this. They want to reduce their dollar exposure. And I think the tariffs were like the final straw, the last nail in the coffin to sort of say, yeah, like this is crazy. We can't use the dollar so much when it's so dominated by one man, his relationship with the head of the Federal Reserve, and his willy-nilliness to implement tariffs all over the place. So they saw gold as a way to get around sanctions. It's a lot harder to sanction. It's a physical asset. It can't be deleted, frozen, cancelled. And I think as BRICS becomes a more powerful force, they're effectively using gold as the reserve currency for BRICS. Maybe they'll eventually transition to the Chinese currency or the Russian currency, but I think for now they're happy to use gold as a competitive reserve currency to the dollar. These countries also owned a lot of gold, but they weren't storing it themselves. They had it in London and mostly in New York as well, and some in Switzerland. So they've moved a lot of gold from London and New York to their own country, so they have physical leverage of it because it is theirs, and they don't want US to sanction it in their own banks or anything like that. So they want to have it because it's, it's tangible, it's physical, you can see it, you can hold it, and for 5,000 years plus, humans have put a value on gold. Silver, I think, has been a bit of a catch-up trade to gold, a bit like the relationship between ETH and Bitcoin. Silver is seen as, wow, okay, we may have missed gold, but let's pile on to silver. And it's got extra demand though, because it's used a lot in other use cases. So it actually has use cases apart from being a store of value in solar panels, in AI chips, in data centers. It's a fundamental building block of a lot of new technology. And we can see here that I think it went from about 3% of the price of a solar panel of the cost, was silver. It's now 32%. So it shows you how much the increased price of silver has actually affected the global use case for it, like in solar panels, like in AI chips. China has also made it a lot harder to take silver and gold out of the country, and they've been buying it a lot more as well. And they're treating silver as a rare earth mineral, effectively, rather than a precious metal. So that's also been seeing a massive surge in demand for silver. And even though these charts are parabolic, like they are very steep curves, I don't believe that it's the end for precious metal. I think there's a long way to go on these trades, and it will get frothy. It will be a bubble eventually, but I think now there is still room to grow. So just finally, obviously we see generally Bitcoin. We're generally younger guys. We're into crypto. Bitcoin was sold to us as a store of value. And I did find this interesting paper talking about why gold and silver has been so popular and not crypto, not Bitcoin, and not ETH. And I think perception is reality. And whether you agree with this or not, and whether this is going to happen anytime soon or not, I think the quantum risk to Bitcoin has increased in people's minds. Will codes be able to be cracked? Will Bitcoin be easily accessible? Will it be able to be stolen? But also, it sounds silly to say, but I think people got fed up with Bitcoin's volatility. Up until last year, Bitcoin traded as a 3x leveraged NASDAQ 100. If you put a 3x leveraged NASDAQ 100 on a chart with Bitcoin, it was very similar. And I think people saw this correlation between very high beta tech stocks and Bitcoin as a weakness, whereas gold has a remarkably low correlation with equities in general, let alone high beta tech stocks. So, I guess when Bitcoin zigs, gold zags, and vice versa. So as the world's being pumped with dollars, as there's been the money printers on since COVID, as there's been inflation and equities running, people wanted something which wasn't directly correlated with gold. And I think possibly the final straw for Bitcoin was the 10th of October last year, which I mentioned earlier, the great crypto liquidation after Trump's China tweet. And that put loads of downward pressure selling on Bitcoin and ETH. And actually, I haven't got the article ready, but I saw earlier that there's been $170 million of liquidations just today, again in Bitcoin, because in crypto, people are massively leveraged up. So when there's these unexpected movements in price, people lose a lot of money. So yeah, even retail are buying gold and silver. This is just a net inflows for the largest ETFs. So I thought it was just very interesting to cover the Dixie losing value, the dollar losing value, and gold and silver having an absolutely gigantic surge.
Yeah, so well, so you can touch on this last little bit before you finish, because on top of that, this is what use that's John, that's why. Sorry, John. This is what you was just on about, isn't it? About the liquidations.
Yeah, exactly. So this is like a perfect example of what I've been talking about for the last few minutes, where the threat of Greenland and the Canada 100% tariffs and the government shutdown, perhaps in 2024, this may have seen Bitcoin rise in price, or maybe not fall as drastically. It's now definitely seen as a risk-on asset, whereas gold is seen as a risk-off asset. And traditionally, it's been gold, but it's mostly been the US dollar as seen as a risk-off asset, a safe haven. And I think maybe people flirted with Bitcoin being a safe haven asset for a while, and maybe it still will be. But in 2025 and 2026, Bitcoin is very much a risk-on asset. It's not a safe haven. And when there's uncertainty, fear, doubt, worry, people flock to gold at the moment. People don't want the dollar, and people definitely do not want Bitcoin.
Now, to be fair, Will, I'm going to say thank you for giving everyone that breakdown. I think you've just gone for a long time. But if I'm honest, I find it hard to be passionate about stuff that, once I don't care about, but like rare earths and stuff like that don't really entertain me as much as stocks and stuff do. So I struggled so much with that. But to be fair, mate, you broke that down great. And that was, I can tell you put a lot of time and effort into getting that ready. So I appreciate that. So thank you.
No, you're welcome, mate.
So obviously, you've had a couple of people here as well. Will, I really appreciate that. So I can, speaking from a spectator's point of view as well, that was well put out, mate. So thank you very much, honestly.
That's one.
Can I jump in with a couple points on that?
Carry on, crack on.
So dollar, I mean, I speak about the dollar for a long time. It's been the world's currency for a long time, but I'll try to keep it short because I know, John, you want to run us through something in a second. On the metal side of thing, I think one thing to factor into it, gold and silver is valued in the dollar. So when we see the dollar dropping in valuation in a weaker dollar, that has a knock-on effect to the price. I'm not at all saying that's the reason for the run-up. There's lots of factors that come into play, and it's probably only a small factor for it. But let's take gold, for example. I think it's a little bit higher now, but say it was $4,500 for an ounce of gold. I've got an ounce of gold, you've got $4,500, and we can make that trade. As the dollar gets weaker, and you can buy less with $1, less with $4,500, your $4,500 is no longer going to buy my 1 ounce of gold because it's not worth the same as what it was. Now it's going to cost more. So now all of a sudden that 1 ounce of gold costs you more than $4,500. It might cost $5,000, it might cost $5,500. So that is then going to factor in and play and start to push up that price of those rare earth metals and the precious metals because the dollar has been the world currency and they've been valued in dollars. As I say, I don't think at all that's the main reason whatsoever for their run up. I think the demand and the use cases, as Will said, is probably the biggest factor, and I think that's why we've seen silver run up even more than gold has, because again, as Will said, there's so many use cases for silver in the AI space, in the energy space. There's loads and loads, and I said this last year in the server around the summertime, just looking at the abundance of silver versus gold, the sort of consumption in tons per year of silver versus gold, and then its valuation, and they don't match up. Gold is priced at a much higher premium to silver in terms of how much they use and how much of it there is. So silver has room to go up as we see that being used more, as the supply doesn't really change unless deep sea mining or Arctic mining comes into play. For the foreseeable, there's going to be I think a tighter supply on gold, on silver to its demand as consumption than will be on gold. So I think, for my prediction, it would have more run up still to gold as we have seen. And then just more generally on the dollar, I think it was also said, I think a lot of it is by design, the devaluation of the dollar, the making the dollar weaker so that exports are more appealing. They're cheaper to those who are importing them. So exports from America, it drives exports up. And then it's got a twofold approach where it makes imports more expensive as well. So those within the US are going to be less likely to buy imported goods and more likely to buy domestically produced goods. So again, it pushes imports down, it pushes exports up, and then pushes the trade deficit in the direction that Trump wants, which is to eventually no longer have a trade deficit in the US and have a trade surplus. And if we look at the world's largest trader, which is of course China, which has also got the largest trade surplus in the world, guess what they've been doing for years and years and years with their currency? They've been keeping its valuation quite low to keep exports high, to keep their surplus high. And I think Trump does take some inspiration from that, and his advisors take some inspiration from that. The world's most successful exporter right now has done the exact same thing with their currency. So I think that's a big part of it.
I think you've both smashed out the part there, and I think people who are watching should be taking a lot of notes. I know I'm going to be watching this back myself to take notes. I think it's a lot easier sometimes to watch stuff and take in that and reading it in the Discord all the time, because sometimes there's a lot to consume. Is there anything else you'd like to touch on that, Will, before we throw the ball to John?
Yeah, so just 2 points, just one quick one. Jordan made a great point. So the price of the precious metals and the dollar is actually inversely related. So when there's pressure on one up, the other one is like goes down. So that's why they're so linked, as Jordan said, because they're priced in dollars. But secondly, if someone listened to that but thought, okay, but how does it affect me? Well, this is what I'm about to say. Like, the one takeaway from this is that even though the S&P 500 is almost at all-time highs, pretty much, even though all like the major indexes in the world, like the MSCI, All World Index, FTSE All World Index, are all at all-time highs, in actual fact, because the dollar's weakened so much, our purchasing of those global ETFs, we're actually getting a discount. If we go and look at the Dixie, so over the last year, as we've been buying our global ETFs, even S&P 500 as well, we've been buying with a weaker dollar. So over time, we hope that the long-term trends of the dollar, as you can see, like it doesn't drastically move around as much as you might think. Like, these are like long-term trends, and generally we think it should revert to the mean. And so it's important to take advantage over the next 1 to 5 years while the Dixie is so weak, because we think that eventually it will regain strength. And right now we're effectively buying these global ETFs at a discount. If the index moves 0%, but the pound weakened by 5% and the dollar strengthened by 5%, our ETF would jump up 5%. So for the last year, it's been an opportunity to buy on a discount. I think this will continue. So if you're ever worried about, oh, should I buy the S&P 500 even though it's at an all-time high? Yes, do it, because you're buying it effectively in pounds, but it's priced in dollars. So we're getting a roughly a 10% discount on the S&P 500. If you're only an individual stock investor, it still works the same. So you know like the FX impact on Train 2 and 2. Right now, I'm sure for all of us, it's completely out of our favor. So we're effectively buying those individual stocks on a slight discount. When the Dixie eventually reverts, as it should do, we'll see a swing in the value of our pounds, even though Nvidia, Apple, Meta hasn't actually moved. So in case that's all you care about, fair enough, because it is a complicated topic. But in terms of, for us, that's how it benefits us.
Yeah, no, I think drop some real wisdom in there in this stream. John's going to take over now. John, you got a hot seat to fill there, my mate.
Yeah, that was a lot of information. I'm not clued up on that stuff, so I appreciated that segment quite a lot.
No, I mean, that was a great segment. So George, Will, thank you very much for your input on that, lads, because that was massive, and I really appreciate that.
But yeah, as Jay mentioned, I'm going to speak about Netflix now, which I think is getting quite a lot of attention. Obviously, everyone's talking about the Warner Brothers acquisition at the minute. They also done a massive stock split, if that's what you call it, but a few months before that. So if we start with the stock price, it's currently down 2.2% this week off the back of the earnings. If you go for the last 3 months, it's down 21%. And if you go for the last year, it's down 12% really. And it's at a new 52-week low. And the reasons for falling is the revenue growth going forward is projected to be lower than what they've had previously. Obviously, there's uncertainty over the Warner Bros. Acquisition. It's got to go through regulatory approvals. That's the funding over it, which is now sort of being sorted. And then there's the competition from Paramount, and they're trying to put pressure on a lot of people to reject it. And then they've got higher content costs recently. So that's a lot of the downturn for this. But overall, the earnings, on the face of it, I would have said it was positive. So if we take a quick look here, the beat earnings per share and revenue. But as you see, year over year, revenue is up 30%. Earnings per share is up 30%, sorry, and revenue is up 18%. Ad revenue, it also rose 2.5%. times what it was previously, and they're looking to double that in the near future. So that would be quite good. And for the first ever time, they crossed the 325 million subscriber milestone, and they now believe they serve around 1 billion people globally. So that is a massive chunk of the global population, and that sort of feeds into why revenue growth going forward might be lower, because they've already got such a big platform. As companies get huge, the revenue growth slows, but they're trying to add value into the platform to keep that revenue growing, which is part of the acquisition. I do have a lot of notes on this. I did do a lot of research, so just
wish yourself, John. Do what you got to do, man.
Viewer hours as well. This is another concern. Only increased 2% year over year. So people are worried that Netflix isn't getting watched as much, or people are starting to look at other platforms. But expectations going into next year is the operating margins are to improve by 2%. They want to scale the cloud gaming sector, and they're bringing out new content categories, which I don't know if anyone's picked up on this, is podcasts. So you might say a One Big Journey podcast on Netflix in the next year or two. You never know. But I thought that was quite cool. But obviously the gaming sector, I believe the partner with FIFA. I don't know if any of you guys know. The partner with FIFA to bring out a new FIFA game. Obviously, FIFA is just the title. I don't know if it's going to be more like Football Manager or EAFC. But yeah, looks like they're trying to bring in some big licenses that grow that part of the brand as well. But why I think it was positive earnings overall is they did exceed all of their 2025 objectives. If you are an investor of Netflix and you go and have a look and see they've exceeded everything they set out for the year, like a year ago, you'd be happy with that. Obviously, it's now forward looking into what they're going to try and achieve. There was a year-over-year decline in viewing of non-branded view hours. So I don't know if this means I tried to figure out, but I couldn't. But I still think it was I need to highlight that. Don't know if that's stuff that they don't produce themselves. But I thought that was interesting. But they are partnershiping with Universal for more licensed titles in the US. And then they are getting more Sony titles globally, which obviously means the catalogue of videos and series and whatever is going to expand for customers. And that feeds into their way of adding value to the product that is already out there. They have also commented on the use of AI, which I think was interesting. I know a lot of companies are commenting on that at the minute. I don't know why I didn't expect Netflix to, but every business is using AI. So AI going forward, they're going to use it to create custom ads. Now, this is for if Jay logs into his Netflix account and he's been watching a lot of football stuff and there's a certain type of image he clicks on more, they'll start tailoring all film images to that sort of image to try and get the click rate up. They are going to automate workflows for ad concepts in the background. They are going to streamline campaign planning, which is where a lot of the spend will go as well. And then another interesting one is they're going to use AI to expand the language that subtitles are available in so they can hit more regions with content. This is obviously like dubbed content. I was watching something earlier, actually, which I thought was interesting. And I thought it was dubbed, but it wasn't. But I know now when you watch something that's dubbed, you can tell. And I was thinking in the future, are they going to use AI to mold the mouth of actors so it doesn't look like it's dubbed? Completely out there, but that's just the thought I had earlier, nothing related to Netflix. Just thought I'd throw that in there. But Warner Brothers, we'll get onto this. So they are looking to buy the film and TV studios with HBO and HBO Max included. If you are a Netflix user, you'll see massive titles like Friends, Big Bang Theory, Harry Potter got took off Netflix at the end of the year, and that's because HBO is launching in the UK this year. So it would be interesting to know if this acquisition goes through, do then platforms get merged or are they kept separate? I also think that will come through into regulatory scrutiny on what happens there, because it's to do with losing jobs and all that stuff. Like I said, there was uncertainty on about how they were going to fund the acquisition, but now they've amended their bid to be an all-cash transaction. They're going to buy Warner Brothers at $27.75 per share. And this is in the aim to expedite the process and create certainty over the value that they're going to buy the company for. Paramount have filed a lawsuit to get more info on the merger. That's interesting. Paramount have sort of thrown the toys out the pram because they're not getting it. They've also had negative feedback from the industry, and Paramount have said that they expect European regulators to stop the deal. And there's some information in here around it not being unusual. So they stopped Adobe from acquiring Figma back in 2023. And the UK competition also forced Meta to sell Giphy in 2022. But as it states down here, the European Commission allowed Amazon to acquire NGM. So that's probably the closest comparison in terms of are they going to let this through or not. But Paramount's confidence, as it says down here, is due to the EU putting penalties on Meta, Microsoft and Google for antitrust crackdowns. So Paramount executives believe the EU regulators would view Netflix in the same way, which I thought was quite interesting. Netflix's CEO is to testify before the US Senate committee on the deal. I think that'll be the most interesting one, and that'll be when we start to see the feel of what the regulators are going to say. There's no date on that yet. It will just be coming. It'll be like when Facebook had Google had it. Was it Facebook or Google about the search? So I think it'll be that sort of thing. Warner Brothers stockholders vote for the merger in April. And then if that is approved, the deal is expected to go through in 12 to 18 months after that, because I've got to jump through all the regulations. So yeah, it's looking positive, I would say, in terms of going through. But I do expect there to be a lot of hoops to jump through and quite a few setbacks in terms of how they're actually going to manage the merger. Is some of the business going to stay separate, or is it going to merge into one? And like I say, there's a lot of negative feedback from the industry because they think it really threatens theatres and cinemas and the release of movies and all the jobs surrounding that. So yeah, it's an interesting one. Like I say, it's got a lot of attention at the minute, so I'll be watching it closely. It was one of the stocks I was going to watch closely going into this year before they even announced the intention to acquire Warner Brothers. So it's just got my interest a little bit more.
So on the back of that, John, because a few people have popped a few things in here. I think Thomas wrote something good. I think it's supposed to say, are we expecting a sell-off due to potential lack of growth over the next year, viewership-wise? So as you just said, it's going to take 12 to 18 months, give or take, obviously, for your regulations and stuff. Do you, obviously watching its stock, expect there to be a further sell-off?
I think it could be possible if that's negative around the acquisition, purely because that growth is already slowing down now. And if they can't bring in added value, this is clearly one of their key drivers to bring added value to the platform, to keep subscribers on there and bring in new subscribers. So if this doesn't go through, I think we could see a sell-off until they sort of figure out what they want to do that way.
And in regards to one of the other lads said, I don't like Netflix as they're acquiring a huge amount of debt for Warner Bros., which has declined market share, will be a drag on earnings. What do you think on the fact that they've gone on all cash? Do you think it was better to do it that way? Like, what's your thoughts on that watching it?
I think it's better to go all cash, personally, on initial thoughts, because the deal they were proposing before that was actually a higher value. And if you look at the market and other big players in the market, they do have quite a lot of debt themselves. Paramount were looking to buy it in a cash deal that was worth, I think, around $20 million more. So in terms of the deal they're getting, I think it's good for the IPO. It's just how are they going to manage that debt going forward, which we will only know once that's in play. But I think debt's quite common for the entertainment industry. I was invested in TKO Holdings, which is media again, WWE and UFC. They had quite a lot of debt, but they were managing it quite well. So, yeah.
And what's your thoughts on, because one of the other lads put something, but he swore on his comments, so I'm not going to show it on the screen.
Okay.
What do you reckon about if they mess up the Warner Bros? Let's say they start messing up some of their shows, because that's what Netflix have known to be done before. Obviously, it's way too early to tell, but what's your opinion on that if they start meddling with stuff?
I think this will come down to if they're going to keep the studios separate and they're going to keep Warner Brothers staff on the Warner Brothers IP, or if they're going to cut this workforce and take all of the creatives away and bring the Netflix creatives in. That could start causing issues. I think around your big ticket stuff, like there's the Harry Potter series coming out, that's already in motion. I think it'll be going forward. It'll be like in the next 10 years, what's that content now looking like from Warner Bros? And if they do mess up the shows, I do agree they will lose a lot of subscriptions, and there'll be a lot more negativity around the brand, which obviously drives away consumers, because perception is half the battle of getting a consumer through the door.
I think that's solid take. George, well, have you got anything to touch on this Netflix space? Is it something you guys have been watching? Have you got anything to touch on it?
So, just quickly on the merger side, I think there's a few different reasons why a company will merge or acquire someone else, and this definitely isn't buy the competition before they grow big enough and provide a threat to your market share or anything like that. It feels like buying something that was an additional asset to Netflix, and I feel as part of that, it's important to then keep that branding. So in terms of the productions and the shows that Warner Brothers has, I think it's important not to change it too much, but just look to improve it and try and keep some of that branding to keep that asset. Just my opinion on that. But Netflix more widely, I've liked the stock for a while. I've liked a lot about the stock, but for me, it's always been at slightly too high of a premium, whilst other things have felt more of a discount. So what we've seen over the past 7 months of it coming down is getting more and more appealing to me for sure. And it's on my list that I need to do a big deep dive on. So I'll be looking out for John's content on his channel for sure on the Netflix side of things. It's one that's really interesting to me, and looking at the valuations a little bit last week is looking very looks like it does have some good potential. So pending a sort of deeper dive for me, and maybe something that I then start positioning in the near future.
One thing I will add in there as well with the stock price is that it is at a nice low. Obviously, it's been valued highly. It sort of had similar valuations to tech companies. It's not really a tech company; it's an entertainment company.
Yeah.
But looking forward at what they expect the margins to get better, whilst the revenue isn't growing as fast. An event that is a good business to buy if they're going to improve them their margins year over year. That's eventually going to cancel out the slower revenue growth in my eyes. You're buying a better business if they're operating with higher margins. So that's another thing I would take a deep dive into when looking into it.
I think also Netflix has been known as a really good cash print over the past 2 years. It's become quite attractive and appealing for that reason to investors. So when that changes, when they're making a big acquisition and it's using up a load of that cash, of course, that's going to shake up the share price, because it's been one of its big, as I say, big appeals has been that it prints cash. So when it's using all of that up, it's going to shake some people's boots a little bit.
Yeah, I think if I recall off the top of my head, they brought in around 10 million free cash flow in the last quarter. So that's quite massive in terms of how big the deal is going to be. Take them a couple of years to cover that that debt. Not that they're going to pay it off. Yeah, sorry. Not that they're going to cover that off in the 2 years, but like you say, it has been a cash machine in the past. There's no reason why they can't do that going forward.
And I think for me with Netflix as well, like I say, I think a lot of people, depends on what you use. Obviously, same with like LLMs and stuff. I use Amazon Prime myself. But I think obviously if they started bringing a lot more of the sports over and a lot more stuff like that in the future as well, it could entice a whole different fan base of getting people over as well, because there's not a lot of football. I mean, they've got some of the boxing that goes on there now. It's mainly the YouTube type boxing, but it's a start of where they're at. Obviously, if they got a lot more of the football, a little bit like Prime do, a bit like Sky does and stuff like that, I think that could be a whole new market for them in the future as well.
Yeah, they've also got baseball coming next year for Japan, because apparently baseball is massive in Japan. So they're sort of hitting the regional popularity of sports. Live events now, they've got the WWE on there internationally. That's just bounced off a massive year from John Cena's retirement tour. So that might decrease going forward, but they've already hooked people in at that point.
Yeah, and like I say, with the WWE, I think obviously because I'm older now, I don't watch it as much as when I was a kid. Obviously, it's a big thing when you're a kid, but I mean, a lot of adults do as well. But I think that was a huge thing for them to acquire that onto a place like Netflix, because, like I say, WWE has been around forever, and although it's censored a lot more nowadays than what it was when we were kids, because when we would say that, actually, John, you're still a kid. You make me look an old man. But when we were like kids, a lot of stuff wasn't like I say blurred out, and it was a lot more explicit. So a little bit different nowadays. But I know people still love the wrestling stuff, and still you can watch all the old stuff on there as well, can't you? Which makes it twice as good as well. Will, have you got anything to touch on Netflix? Have you got anything to? Is that something you've looked in the direction of, or?
Yeah, well, I think just so like the main reason why I wanted it to be covered this week is because I think it's so important for like culture. So I think my angle in my mind is less about like actual investing, to be fair, and more thinking about like the amazing titles which Warner Brothers own, like in terms of like the actual IP which they have. Like this is it a once in a lifetime opportunity for Harry Potter, for Game of Thrones, for the Sopranos, for Sex and the City to actually be up for sale? Because if and when Netflix get them, like they're not going to get rid of those. Like these are some core 20th century, early 21st century cultural icons. So that's why I'm most interested. I do actually own some Netflix stock on a failed swing, but but I think it's just interesting to see how it goes because of all like the political implications as well. Trump hates Netflix. The US need to sign off on this merger. The EU will have an impact as well. They'll have an influence. So I know 12 to 18 months sounds like a long time, but I think it could be a 12, 18, 24 months with a lot of news, with a lot of swings, with a lot of back and forths, failures, successes. So it's going to be a really interesting cultural, like a cultural investing story to watch over the next couple of years, I think.
Yeah, just to add on to something you mentioned there, because you've just triggered something I read in the report. They want to focus on fandoms going forward. So now they have like a Netflix experience in America, which has Stranger Things and the stuff. So like you say, they're going to acquire Game of Thrones. They're going to acquire Harry Potter. The fan base of that goes back generations. I'll be showing my kids the original Harry Potters and they'll be watching the new series when it comes out. Like they're trying to get deep rooted into where the fan bases are.
Yeah.
And I was looking forward at some of the films coming out. Interesting. They've got the Narnia franchise and they're going to do all 7 books. I think whoever did it last only done 3 or 4. They also have Pride and Prejudice coming out as a film this year, which is a huge book. So that's going to pull a lot of people in. So yeah, they're really trying to tap into that fandom base going forward.
Yeah, so I know some of the comments in our chat were perhaps a little negative of Netflix, but I think that's just in my opinion, that's more of a view for the next 3 to 18 months. I think long term, this should be a fantastic purchase for Netflix, even though it's so successful, because you got to think they're already so big and they're getting some of the biggest, most popular titles ever. And as John says, like people are going to want to watch these. And as Netflix grows and grows, maybe the new subscribers will drop, but it'll be about that, time spent on the platform and other ways to monetize it, like that way, maybe via ads and stuff. So I think the global reach of Netflix and the acquiring of these 10 out of 10 IP titles is a real win, although it might be more of a medium to long term play rather than short term.
Yeah, no, I think you've hit it on the head there with that as well. Was there something you was going to add to that, Jordan? Or?
No, I was just going to make a joke. I was going to say, I think you can actually see Will's failed swing just when that run of red candles starts.
Literally.
That's in his same 2-1-2 pie with his TTD. John, we're doing 10 more minutes after this on the earnings. Have you got to jump now, or do you want to stay and do that with us? Which one are you doing?
I'll have to jump now.
Okay,
but I do appreciate the time. I appreciate everyone that's watched. These happen every Sunday, whether it's on my channel, but mainly on Jay's channel. So get up every Sunday at 8 p.m. Get these on. Follow the Spotify, and yeah, thank you for the time. I'll see you in the next one, hopefully.
No, that's sound. And if for everybody that's in the stream right now, we've got quite a few people in. We've still got a few people sitting in. John's link is in the description. Go give him a follow. Go show his content some support. He does some really good deep dives. He breaks down his content really well. He does it well for a Geordie, at least, anyway. No, John, we really appreciate your time, mate. So thank you.
Yeah, nice one,
That's
John.
no problem. Thank you for the time.
See you
Catch you
soon,
in a
mate.
bit.
See you in a bit, my mate. So, lastly, on the agenda, earnings for next week. So we've got Elon Air on Monday. I thought that was I've seen that and it caught my eye. That did. What do you think about that spat with Elon and Ryanair's CEO, Jordan? Will, what do you think? What would you?
Yeah, I saw a little bit of that. I mean, it's good exposure for Ryanair, of course, and that's why they've sort of entertained it and lapped it up. I do think that from what I've seen, the CEO of Ryanair is wrong in what he was saying, and how he can say that Elon Musk doesn't know anything about it when he's literally got SpaceX as part of his sort of CV is wild. But yeah, it's good exposure for Ryanair. It's a good laugh. But I also, to be fair, I do think that it was all about the Starlink, wasn't it? And in fairness to Ryanair, I don't think you're going to really be paying for Starlink if you're just doing a 1 hour flight to somewhere in Europe. You're not going to care about not having internet for an hour. So both sides have their rights and their wrongs, but it was funny.
What's your view on that, Will? Did you see it? I'm just checking to make sure John's link is right in the YouTube thing. So.
Yeah, I saw it, mate. Yeah, I think it's just something silly, really. I think it is quite funny that Ryanair and Tesla are both reporting this week, so it'll be interesting to see what they do, like stock wise and earnings wise. But I mean, it is what it is. I don't have a massive opinion on the feud, to be honest.
No, and so next week, massive week of it. I just seen right now when we were chatting just, and I thought it made me laugh.
Yeah.
What we thinking on the week ahead then, lads? So obviously we've got some massive names reporting next week. We've got a lot happening this week. It's actually quite a crazy week next week. Where we at, Will? What's your thoughts on the earnings?
Yeah, well, I think my eyes are certainly drawn to Wednesday, and Friday for SoFi. So SoFi Friday, obviously before open, because Anthony Noto loves to wake up at about 4 a.m. On the West Coast and do the earnings call at 4:30, 5 a.m. for some reason, his time. Yeah, Wednesday, ASML in the morning, massive name in the chip AI world. Then Microsoft, Meta, and Tesla all on the same day. I'm not sure exactly what time all the calls are, because I'm sure one of them will clash, but you should be able to listen to at least two of those live. And also Apple on Thursday. Yeah, shit. It's a massive week next week, isn't it? So out of these 4 Mag 7s, I actually only own Meta. So I'm mostly looking forward to Meta and SoFi. But in terms of like wider market movement, like there are a lot of big names, even Visa, AT&T, Nokia, Caterpillar, MasterCard. Yeah, like there's a lot of big names. And I can talk a bit more about Meta if you want me to as well.
Yeah, so we can come back and re-scoot back onto that in a second, George. And then but I've seen a few people mention ASTS when we started. Obviously, stuff like Verizon, AT&T, stuff like that really matters to people like ASTS. George, is there anything else that you're watching on this week that you're seeing here that's catching your eye before we touch on Meta and stuff? Is there anything that...
Yeah, so similarly Wednesday to Friday, the stocks are for the earnings that I've got holdings in. I've been interested in Apple as well, though, the first couple quarters for this year, just what they have been working on in the sort of AI and chip space. Any announcements there? Wednesday is obviously a big day. Meta is sort of like a part of an indicator for what Google might look like in terms of the ad revenue, that sort of thing. They've got some similarities and some overlaps there, so I can use Meta to sort of start to understand what Google might look like the following week. I think the following Wednesday. But yeah, lots of big names.
George, do you own SoFi as well?
Yeah, I've got SoFi.
So all three of us are SoFi holders, and so Friday is a massive one for us. Do you know what annoys me about SoFi earnings? 9 times out of 10, they report earnings when Summit's kicking off. It's almost like it's destined to just be pulled down when they pick the worst dates to report their earnings always. Roger, Will, if you want to jump on, touch back on Meta, because I know a lot of people have been watching this stock get beaten up lately. So yeah, if you want to jump on that.
Yeah, so obviously this time we won't have the one-off 16 billion, 18 billion tax charge, which brought down EPS massively. So I think it's really good to get like a nice clean month of earnings, like without any one-off charges, one-off tax deductions. Like where actually are we going to be? because Jay, could you just pull up a meta chart for the last 6 months or year or
Of course,
something?
yeah.
Is that right?
2 seconds. Yeah.
So obviously after last earnings, we've kind of tanked since then. We dropped to about 650, then 600. I think the bottom was 583, 584. So I think currently we're sat around 650, 660, although I'm sure we'll probably open tonight futures around 645, 650, something like that. Yeah, I think Zuck's got to do a lot on this call. One thing I definitely realised is that even though I look forward to these earnings calls, they are always a bit boring. So I'm prepared for it to be a bit boring, but I need Zuck to inject some energy and some clear direction about effectively where is this capex spend going. It's projected to be over $70 billion. Are we just gonna be focusing on like AI for ads effectively for Instagram and Facebook, or are we going to do more? I know a couple of weeks ago, like the Meta data center, I can't remember what they called it, like that was kind of announced. So it did look like potentially Meta might become like a neo cloud, like a CoreWeave, like a Nebius, and almost eventually join the GCP, AWS, Microsoft Azure land, but obviously theirs is going to be more AI focused rather than cloud. So are we going to have a neo cloud? What we're spending capex on, and also what we're doing with the metaverse as well. Obviously, we've seen that the headlines around Zuck cutting 30% of the budget for the metaverse. I think that's like a key direction as well. But yeah, I think this is a really, really an important call for Netflix, for Meta after last earnings. So we need a clear direction. Where's all the money going? And if we're increasing capex, as it looks like we are, we really need a clear way which that's going to bring in revenue.
Yeah. So again, I think Meta is like say a lot of people have been buying Meta and liking Meta for a while. Obviously, it's down quite a bit over the last 3 months. I think it's down like 10, 11%, but it's still up like 1.62% for the last year. But I think, like I say, I don't really watch Meta that much, too much to it. I am looking forward to the Tesla call. So I like to see Elon's calls all the time. It's funny because the stock always drops and then it always manages to come back up. So is there anything else where you want to touch on this earnings? Because I know we're getting quite on now. So obviously, is there anything
you
else
want to say about SoFi, Jordan?
No, I don't think so. I was laughing at, so there's ADP there at the bottom. On Wednesday, I used to use that system at work previously, and I really don't like the system, so I won't wish anything bad on the stock itself in case people invest in it. But I've got a hatred for that thing.
No, but like I said, I think next week's going to be massive, and I think we're going to have a lot to talk about next Sunday when we do come back in.
For sure.
So obviously at the beginning of this stream, we started a poll to see whether the stream thought it would be green or red. 63 people have voted, and 60% voted red and 40% voted green. So that is now closed. So the stream thinks that next week it'll be red, Jordan. So we've got 4 greens, and then the stream think red.
Interesting. We'll see what ends up next week.
Be interesting. I think this has been a great stream. I appreciate your time, lads, as always. Will and George, you absolutely crushed it. So did John with his segment. I'm like Anton Deck now. I just basically post and pass the mic about. But no, I think it's been a great stream. I think a lot of people have learned a lot. The engagement's been locked in. To be fair, we've had a decent viewership for the hour and 40 minutes that we've streamed for. So that's been fantastic. So yeah, Will, George, thank you very much for your time, lads. Is there anything else you want to say before we finish?
No, good, mate. Nice one.
No, good. Right. So that was one big stock market Sundays with one big journey. That was with me, Jordan, Will, and John. And we appreciate all of your time on this Sunday evening. And we will be back next Sunday at 8 p.m. And we look forward to seeing you. So, yeah, thank you very much, guys. And we'll see you next week.
Thanks, guys. Bye-bye.